Welcome to Looking at the Markets with David Modell, the poor man's covered call. What is it, and how can you collect weekly income from it? Well, okay, let's say you have a stock and you wouldn't mind buying 100 shares of it, right? Let's say you have the money to purchase 100 shares. So let's take, I'm on the Schwab platform here, and this is Target stock, just for the example, TGT, ticker symbol. And let's say you don't want to buy 100 shares. You have enough money, but you just don't want to use up that much money right now necessarily, because buying 100 shares of Target right now would cost almost $22,000, as you can see, right? $219.19 per share. Yeah, it's almost 22 grand, $22,000 to buy 100 shares of Target. So maybe you have the cash in your account, but right now you don't want to just commit that much capital to it. I get it. Not a problem. And maybe if you did buy 100 shares, what a lot of people would do is every week, every Friday, expiring every Friday, they would sell a covered call against it, right? And so they would, after buying 100 shares, they would go to call, and they would pick the nearest Friday expiration. They would do at the money, maybe, right? Okay, like 220 in this case. Then it would be call, and then you'd sell, right? And you would sell a covered call and, collect a couple $100 in this case, right? Maybe every week, collect a couple hundred, right? You're making income every week until sooner or later, Target stock would shoot upwards in price, and then you would get assigned, okay? And so, yeah, the person you sold the covered call to, maybe they would assign you, and so you would have to sell your 100 shares of Target stock. All right, no problem. Probably you would make a profit from that, especially if you're collecting a couple $100 every week, week after week, until you get assigned. But again, what if you don't want to spend that kind of money? Maybe you have it in your account, but you don't want to buy 100 shares. Instead of buying 100 shares, you could do something very similar. You can buy a LEAP option, LEAP, which is a long-term option, 1 year or longer, usually 1 to 3 years out until expiration. Aha. So instead of buying 100 shares for around $22,000, you can just buy a LEAP option. This one's about a year out. In this case, instead of $22,000 for buying 100 shares of stock, it's only around $2,500. It's a lot less, right? $2,500 for the LEAP call, buying it, versus buying 100 shares of stock for around $22,000. Yeah, this is much cheaper, right? Okay, and it's almost like owning 100 shares of stock. Not quite. There's still an expiration date, but it's a long way out. All right, so yeah, it's pretty close in the way it behaves to owning 100 shares of stock. You just have that expiration date. That's the disadvantage. Still, it's a lot cheaper, isn't it? So that's a big advantage. Now, what if you want it to be like a covered call, where you collect income every week? Okay, no problem. If your broker allows you to, you might consider selling not a covered call, because you don't own 100 shares of the stock, so it's technically speaking, it's not covered. But what if you still sold a weekly call option expiring every Friday? What if every week you sold an at the money, same strike price, $220 in this case, and collected a couple $100, let's say, every week, week after week? Wouldn't that be something? Maybe eventually, if you don't get assigned for a long time, maybe eventually you would actually collect so much money that you would pay entirely for that LEAP call you bought, right? In this case, if you bought a LEAP call for around $2,500, and every week, week after week, you just kept selling the weekly options, right? The poor man's covered call, just sell them week after week, collecting a couple $100 every time, let's say, you might actually end up owning, in effect, that LEAP call for free after a while. Wouldn't that be something? It could happen, all right? Now, what's more likely to happen? Well, you're probably going to get assigned sooner than that. Let's be realistic, all right? You'd have to go for a long time without getting assigned to collect so much money that you would pay off that LEAP call that you bought. It could happen. More likely you'll get assigned sooner or later on one of these short-term weekly calls you're selling every week. Okay. So let's say you get assigned, right? Somebody exercises their option, and now you have to come up with 100 shares to sell to them. What do? You don't own 100 shares. But you have access to 100 shares. Remember, you bought a leap call, right? You bought it. That gives you the right to buy 100 shares at the strike price at any time before the expiration date. Aha. So even though if you get assigned on one of the calls that you sold every week, you get assigned, okay, whoops, this one, here it is. You're selling calls every week. Maybe, probably, sooner or later you'll get assigned, especially if the stock price goes up a lot. No problem. Yes, you'll have to come up with 100 shares, but you have access to it. Remember, you own a call. You bought one, and you can exercise your call. You can exercise your right to buy 100 shares at that strike price there. So there you go. It's like a replacement for 100 shares of stock, that leap call that you bought. It's not covered. It's not a covered call. You don't own 100 shares, but it's almost like a covered call because you have easy access to 100 shares. Just exercise that leap call that you bought, and you'll have 100 shares of stock. There you go. That's the poor man's covered call. And I know it sounds disparaging to say poor man's, right? You don't have to be poor to do this. Even if you have a large account, you can do this. Because maybe you just don't want to buy 100 shares. Maybe you'd rather spend less money up front and buy that leap call. And maybe you just want to make that income every week as if it's a regular covered call. So try, if you want, consider trying out the poor man's covered call. I recommend trying it with demo or virtual trading first if your broker allows that. That way you can test it out without real money to see if you like it, to see if it's really for you before you commit any real capital to it. And always use small position sizes. Don't go crazy with the strategy, okay? Small amounts of money. But consistent income is possible this way. I mean, why just buy a leap when you can sell weekly calls against it, okay? And maybe even eventually pay entirely for that covered call. Wouldn't that be something? It could happen. Or at least pay for some of it and reduce your cost basis considerably. Maybe. It could happen. It's worth considering at least. So I invite you to take a look at this, try it out with virtual or demo trading, and if you like it, you'll have another tool in your strategy toolbox for options. If you like this video, please give it a thumbs up on YouTube and subscribe to my channel if you haven't done so already. I want to thank you for watching and listening. I will talk to you again soon.